We're looking at some financial news now. The Federal Reserve is meeting today. The question is, what will it do about interest rates? The Fed will announce its decision early this afternoon.
Financial expert Terry Savage joins us now. Good morning, Terry. What do you think the Fed will do?
Good morning. The street is betting that the Fed will leave rates unchanged. They have a lot of control, but they don't have all the control. And now the markets are starting to watch, how much more are we borrowing? How big is our deficit? Will foreign buyers come in? The Fed had been buying a lot of the debt, paying for it with newly created money into the economy. The Fed says it's not doing that anymore. So interest rates could go up despite the Fed's saying that, well, we're not going to raise them. The market may say, well, we're worried about America, the political situation, and so forth. On the other hand, all the money in the world comes here when the world gets scared about what's going on globally, despite our political mess. So that keeps interest rates down because they want to buy T-bills, they could get a lower rate.
You want to talk about bonds real quick.
Okay, headline this morning. Remember a year ago when everybody was rushing to buy those Series I savings bonds to get in on that 9.62%? Well, today they've just announced the new rate, starting today for 6 months, will be 5.27%. That is for new buyers. However, there's a big catch to that. That includes a 1.3% fixed floor. You don't get that if you bought the bonds last year. So if you bought those bonds last year when they were so attractive, now you're only going to get a much lower rate, 3.94%, which means you're going to ask me, and I know this sounds complex, but a lot of you, remember we crashed the Treasury's website last year trying to buy those. So a lot of you are going to say, should I cash them in? And the answer is maybe. I'll tell you what, if you cash them in and buy the new bonds and get that 1.3% floor, it'll only take you 9 months to break even. Or you could cash them in and buy 6-month T-bills. Remember, Robin, we've been following those. 5.5% you would get on 6-month T-bills. The answer, go to your Treasury Direct account where you bought the bonds. It'll show the cash-in value. You might want to cash those in now and either buy the new Series I bonds or buy 6-month T-bills.
Gotcha. All right, let's get to some viewer questions.
I'm going to put a column up.
Okay.
If that went by too fast,
What's your home number?
Go to terrysavage.com and I'll explain it there and put in links. Okay.
All right, this person says, my daughter has $27,000 in outstanding federal loans. She's never made a payment, but will start this month. I am able to give her about $20,000 toward her loans, but she doesn't know if she should apply it to her balance in one lump sum or spread it out. Any thoughts on what the best approach would be?
Okay. Well, first of all, that's very lovely. And I want to say, Mom, I guess it was a mom, thank you very much for doing that. Just make sure you aren't giving away this money now and might need it for your own retirement. It's always tempting. And the second thing, your daughter should go to studentaid.gov, look up her loans, and make sure that she's got them all set up to pay. And finally, she might qualify for either some forgiveness, but she hasn't paid for very long. She might qualify for a lower income-based plan. You want to do your homework. And there is a possibility that you might be able to pay off a whole chunk of the balance and pay the higher rate loans first. If you want personal advice on paying off student loans or dealing with this new repayments now they're starting, well, we put up, you can go to studentaid.gov first to find your loans. And then if you really need help, you've been paying for a long time, go to my friend Ray Kaplan's website. I introduced her to you. I know she was on here. She will help you work out deals where she's gotten forgiveness for a lot of people that have paid over the years.
Gotcha.
All right, next question. I, along with several seniors, have a timeshare that I can't use. I signed with the company several years ago. I gave them thousands that I lost, and they didn't cancel my contract with the company. Could you please direct me to someone to help?
Okay, this is a column that I just answered last night, a question on my website, my Ask Terry blog. First of all, never put up money up front to try and get something that's going to give you money back, whatever it might be. There's all kinds of scams like that. And then they count on you, particularly if you're a senior, just being too embarrassed to report it. Let me tell you where you report that kind of scam, and you'll find this also on top of my website. First of all, you're going to go to the Consumer Financial Protection Bureau and file a complaint. So it's cfpb.org. Second of all, if you're in Illinois, if you're listening, you go to the State Attorney General's office, and that's where you're going to file your complaint. And third of all, you should call the FBI. FBI, it's 1-800-CALL-FBI. You must report this. That doesn't mean I'm going to get your money back. it's lost and gone in a scam. But now we're seeing more of that. There are a lot of them that deal with put your money up front and we'll negotiate your credit card interest rates. There are a lot of them, give us money up front and we'll negotiate what you owe the IRS.
So wait, are you
Don't
saying
fall
all
for that.
timeshares are
No, no,
rip-offs?
no.
So I'm
saying
confused.
a lot of people like this gentleman, way back 20 years ago, it seemed like such a great deal. I'll buy a timeshare, I'll go the second week in August, or I can swap it for another week. And now you're old, you're not traveling, you don't want to go.
Oh, and they can't get out of it.
They can't get out
Got
of the
it.
contract and you have to pay every month. So be very careful, do not give money up front to anyone
Got
to
it.
get you out of one of these things.
All right,
Report
last
it.
question here. We recently made a contribution to a 529 account for our grandson. They live in Kentucky. We are Illinois residents. Are we entitled to any type of tax deduction, either state or federal, for our 2023 taxes? Would we be entitled to tax deductions for future contributions?
Illinois has a 529 plan. It's a great plan. It's called brightstart.com. Even if your children live in another state, you open these plan in Illinois, you'll get a tax deduction for up to $10,000 of your contributions on your Illinois state taxes. Some other taxes states have tax breaks for residents, but we're here in Illinois. Bright Start's a great plan. Make your contribution, get the deduction. The child can use the money for any college in any state, and any grandchild in the family can use the money if one doesn't need it.
All right, sounds good. To ask
Okay.
Terry a question, go to terrysavage.com. Good to see
Thank
you.
you, Terry. Time now for Around Town.
Hey, Anna.
Good morning. We are at the Museum